Hey guys, welcome to the Apartment Investing Journey. My name is David Robinson. I've got a great guest on the show today. He's a guy that I feel like I know personally, even though I don't, just because he's got such a killer Instagram and he does a great job just providing a ton of value to everybody. One of the most down-to-earth guys that I've seen out in the business right now that's just sharing about his experience and his journey. And I'm excited to have him on. Gabriel Hamel, welcome to the show, man. Appreciate you coming on.
Hey, thanks for having me on, and thank you for the kind words. I appreciate it.
Yes, I mean it. I think you're one of those guys that doesn't sugarcoat things, just tells it how it is, and I think you really just try to bring value everywhere you go. So I appreciate that. A little bit about Gabriel. He is a real estate investor whose passion for real estate business and financial freedom has helped him to amass a multi-million-dollar real estate portfolio consisting of single-family homes, multifamily apartments, commercial real estate, and mobile home parks. Time freedom, family, health, wealth, and happiness are important to Gabriel. He has a beautiful wife and 2 sons. He believes that being healthy, wealthy, and happy are choices. And with the right knowledge and, more importantly, effective action can all be greatly achieved. So with that being said, Gabriel, the premise of our podcast is to get the whole story and the journey that you've taken to get to where you are today. And so if you don't mind, back up and tell us about your journey.
Yeah, let's see. We can go pretty far back. I grew up lower middle class. There was always things that I was interested in and wanted that parents couldn't always afford. I mean, I had a great childhood and great parents who believed in me. But at 12 years old, I went and got a paper route. So we're backing up pretty far back.
I like it. Yeah, I like it.
So I got up at 5 a.m., every 7 days a week from 12 to 16 until I could get a regular entry-level job. And then, school for me was definitely not where I excelled. So I did fine, but academia was not my thing. I was in school for wrestling and for the social aspect. And then shortly after high school, well, let me back up even more. So I actually had joined the Army National Guard my senior year of high school, the 1 week in a month, 2 weeks a year, just like the commercial. So that was in 99. I graduated high school in 2000, did the once a month thing. And in 2002, I picked up the book Rich Dad, Poor Dad, and it completely changed my life. And I used to be embarrassed to share the story, but in 2002, that was actually the first book I'd ever read in my life, cover to cover, word for word. I was not interested in books. I didn't think I liked learning, which I later realized it was just dependent on what it was that I was learning. And so when I picked up that book, it was the first book that really not only inspired me, but that I just didn't want to put down. And it's the first book that really made sense. I thought, this is what I'm going to do. And I think I can do this. I know I can do this. And so shortly after reading that book in 2003, I got deployed to Iraq, to Kuwait in Iraq. I spent a year, it was a 14-month deployment, but 12 months in the Middle East. I came back in 2004. And oftentimes on my deployment, I would share with people, hey, I'm going to come back and I'm going to build this real estate empire. And my friends thought I was crazy, maybe called me an idiot and different other names. And they said, hey, how are you going to do that? So got back in 2004 and in 2005, I bought my first property, and that's kind of the beginning of my investment journey.
Well, let's talk about that first property then.
Yes.
I do want to dive into this mobile home park. That's going to be a cool story. I want to do a deal dig on the mobile home park, but let's talk about this first deal. How did it happen? Walk us through the steps that you took and how it all went down.
So for those of your listeners that were around in 2005 or were investing in property in 2005, that's right at the peak of the subprime. So without a job or income, I went to the bank and said, hey, I'd like to buy a house. And they gave me a loan. It was 100% financing loan. It was a 3-bedroom, 2-bath. I brought in no money. I rented out 2 of the rooms, which now they refer to as house hacking. I didn't know what that was. It just made financial sense. I lived in 1 room for less than I could live anywhere else, and I rented out the other 2 rooms.
How did you identify the property? What was it about that property? Did you have the plan to house hack, and was that sort of the mentality going in?
Yeah, it was interesting. So it was a peak market, and I was making offers on all sorts of properties, and I was amazed that I was approved for a loan, but I went and got after it. And I was making offers, but I had this finance contingency. So I was competing with a lot of cash buyers back then, a lot of really strong offers. And so I made multiple offers on multiple properties and just kept getting beat. And so It was actually a friend of the realtor's son had bought a home at auction, was renovating it. And it was in a part of town that was a good part of town. And I'm standing in this thing going, nobody else knows it's for sale. Nobody knows about it. The seller's willing to sell it to me for a price below what market cost would be. And I have no competition. And I thought, and I immediately realized how important relationships were. I thought, this is a friend of the realtor's son. And I was able to find this through a relationship that the real estate agent had. And so that was how that came to be. My plan was to rent out the other 2 rooms. Just, I didn't have a lot of money. And so it just made financial sense. And so I lived in that house for a year. And then in 2006, I went back to the bank, and the bank gave me another no money down loan. And at that time I thought, this is amazing. I'm going to do this every single year for, 20 years. And I'm going to have a decent amount of homes, and I will not have put any of my own money into it. So I moved. And then in 2007, I went to the bank again. And in 2007, the bank said, yeah, we'll do it again, but this time you need 5% down. So I had also opened up a small nutrition store earlier that year. So I had a little bit of money saved up for that 5% down. And so in 2007, I now have 3 houses, 2 no money down deals, 1 5% down deal. And I thought, this is great. You want me to keep going?
No. I got a few questions for you on that now.
Sure.
Okay, cool. So on the first deal, you live in it for a year.
Yep.
And is this thing cash flowing for you at this point? Or are you supplementing some of the cost?
Yeah. So the rooms covered a majority, the 2 other rooms covered the majority of what my mortgage payment was, but I was paying out of pocket a little bit, but way less than I could have rented anywhere else in town.
Gotcha. Okay. And then when you moved into the next property in 2006 with no money down again,
yes,
did you just rent out the 3rd bedroom then and keep that property that you had the very first deal, or did you end up selling the first deal?
Yeah, I ended up keeping that property. I still have that property today.
Oh, that's awesome.
Yeah, I ended up moving everybody out and just renting it out to a family as a long-term rental.
Okay, cool. All right, awesome. So this is great. And we want to get in, I think you're known as like the no money down guy. Like
Sure.
You figure out these seller financing. I want to get into this creative financing thing here. But push us forward from there. Okay. 2007, you have your first deal and second no money down deal. You put 5% down on the 3rd deal.
Yeah. So
then
now
where'd you go from there?
Yeah. So now we're getting into 2008. I shut my nutrition store down because it wasn't making money. My first son was born, and I went back to the bank and said, hey, I want to buy another house. And they said, hey, things have changed a lot. You actually have to have a job, you have to have income, and you need a down payment. And there's a whole bunch more paperwork now. And I thought, oh wow, okay. I was so spoiled with these no and low money down deals. I thought 30, they told me 30%, and I thought 30% down is a decent chunk. And I have a newborn son, and I just shut my store down. So it was kind of in this freak out mode. What am I going to do? And so I had shut my store down. Like I said, I took on a ton of just odd and end jobs, things I found on Craigslist, a lot of just help wanted ads. And I eventually landed an entry-level minimum wage job in a special education class at a high school. I was also coaching high school wrestling. And so this was a low paying job. And about 3 months into that job, I was literally cleaning off human feces out of a stall that a kid threw everywhere because he thought it was funny. I didn't think it was very funny. Man. And believe me, my heart goes out to these kids, though I knew this was not my dream job. This is not what I wanted to spend my life doing. And so as I was cleaning this, shit off the stalls, I started thinking about my goals. And I thought, hey, I need to get really serious. Well, one of my goals was to be financially free before I had kids. And I was not financially free yet. I owned a couple homes that were cash flow positive, but not enough to live off of. So that year I decided if I could replace my income, and it seemed like a very achievable, obtainable goal because it wasn't a lot of income. I didn't have some high paying job, some high salary, but I made a little bit. And so I thought if I could replace this income, I could quit working. And so I focused that year, 2009, I bought my first seller financing deal. It was 2 duplexes side by side, and it cash flowed almost to the dollar I was making at that job. And so I finished that school year out working at that job, and then I stopped working after that. So I was I was financially free, so to speak, not wealthy yet, but I owned my time and I could go put more deals together.
Wow. That's incredible. And I think that's the power of getting started at an early age before you had, obviously you had your first son, but you hadn't fully started a family and like had multiple kids and all this. And so and you had kept your expenses minimally low.
Very low. For a lot of years, I really didn't spend money on anything. It was just the mindset of, if I'm going to spend my money, it's going to be in assets. It's going to be in real estate, and everything else can wait. I wasn't buying new shoes or even jackets or anything. It just, everything else was second to the dream of being financially free through real estate.
Man, that's great. And so, let's talk. I think this is a good segue to start the conversation about seller finance, because this is the first seller finance that you had done no money down deals before, but this was the first seller finance deal that you did in 2009. Did you say it was 2 duplexes or a total of 4 units?
Correct. Yep.
Okay. Do you mind just walking us through, like, number one, how did you find those deals? If you can remember, I know it was a long time ago, a decade ago.
No, I can remember.
But also the process and how you started to think about this idea of seller finance.
Yeah. So it was out of necessity. So the bank said no. And I knew that I wasn't going to let a bank telling me no stop me from building my dream. And so I don't remember where I had read something briefly, probably in one of the Rich Dad books, about seller financing, and just, if you're not bank financeable, there's other ways. And so I just started researching online. I was just Googling different, what is seller financing, and just learning as much as I could. And then I would go on Craigslist every day and I would type in words like seller financing, owner carry, seller carry, owner terms, for sale by owner, as is. I was just typing in all these key words every day. And sometimes things would pop up. Most of the times they wouldn't. And then, there would be sellers that were offering seller financing. I'd have conversations with them, and the terms were just so outrageous. It didn't make sense, or they wanted huge down payments. And so my first deal, they were actually offering seller financing on Craigslist. It was a seller who had it previously financed by the person they bought it from, and they wanted out of the deal. And that original seller was willing to finance the buyer. And so I structured the deal where I didn't have to come in with almost any money, and the terms worked. I mean, looking over the numbers originally, I'm going, what am I missing? This cash flows. This makes sense, but it worked. And so, these sellers were in a position where they didn't want to be landlord. They were an older couple, and they understood the advantage of selling the property with seller financing, because they got to be the bank. The mortgage payment went to them. And so it was a true win-win scenario. And I immediately realized, wow, that you really can create a win-win scenario for the buyer and the seller. I walked away from the deal happy to have my first seller financing deal, 4 more units, and they were thanking me for buying the property because they were excited to get that payment every month in the mail.
Yeah, that's a cool story. And we'll get into a little bit more about structuring these deals here in a second. But interesting time, 2009, the market had shifted. In fact, it was probably in a lot of turmoil when you found this deal. With the market, and I should have asked this earlier, Gabriel, but what market were you in when you were buying these properties?
Yeah, I'm in Oregon. Almost all my properties are in Oregon, and I'm in Eugene, Oregon. We're about 90 miles south of Portland. Okay,
cool. And so the market is starting to turn and is probably on its way down, steep decline in 2009, I'm guessing, in Oregon. And so I'm interested in, I'm assuming that with the seller finance, they didn't require much money down, you said. Is that correct?
Correct. Yeah. Almost no money down. And then with the prorated rents and the last month's rents and deposits, it ended up being pretty close to nothing.
Okay. And was there any concern in your mind about the way the market was going and being so leveraged on that property, or was it was already cash flowing, so it was just a matter of keeping the cash flow?
Yeah. I mean, truth be told, I had almost zero concern, and there's a couple of reasons. So, the first 3 properties, there was no money involved, right? And so it was worst case scenario. What is the worst case scenario? So even though I was 100% leveraged, it was, if I were to default, which I never have and never plan to, worst case scenario, they get the property back. And so I structured the seller financing deal the same way. I said, will I get in cash flow? And I made sure every property that I bought was cash flow positive when I bought the property. And so in that term length, originally it was a 2-year term. I had a balloon payment in 2 years, and they eventually actually extended that because they were happy to have that monthly payment. But would I have earned the little bit of money that I took out of pocket on my down payment? Would I earn that back in cash flow during that 2 years? And the answer was yes. Did I have a lot of reserves? No. But was the risk of not doing the deal greater than all the what ifs that could happen? What if all 4 tenants moved out at one time? What if there's some crazy maintenance repairs? And yeah, there were times that it was, oh my gosh, a tenant moved out and I need to get someone in, and there's some repairs that need to be taken care of. But the risk of not doing the deal, I mean, am I happy that I bought that 10 years ago? Absolutely. Has it cash flowed for 10 years? Yes. So all these what ifs, all these risks, I think it's a lot of times riskier to not do a deal.
Yeah. Love it. Love that mentality. That's great. Okay, cool. Take us forward from there.
Yeah. So, in 2009, I thought, oh my gosh, seller financing, the true win-win. And so from 2009, 10, 11, 12, even into 13, I put a bunch of seller financing deals together. And during that time, I thought, oh my gosh, I need to go educate the world and all these sellers on why they should carry financing, why they should, sell a property to me particularly with seller financing or anybody else. And then I reflected back and I realized that everyone that carried financing for me, they already understood the advantage of seller financing. And so at one point I thought, I need to go educate the population, but why would I spend my time doing that if I could just get in front of enough sellers that already understood the advantage? And even today, one of the questions I get asked most is, how do you talk a seller into carrying financing? How do you convince a seller to finance you on a deal? And my response is always, I've never had to convince a seller to carry financing. I work with sellers and I try to get in front of sellers that already understand the advantage of carrying financing. That way the conversation isn't me explaining something, a new idea. If you're trying to explain a new concept to, say, a 70-year-old couple who've never heard of seller financing, it probably sounds like a strange concept. But if it's a 70-year-old couple that maybe bought a property using seller financing and they already understand the advantage, then the conversation is just around the actual structure of the deal and what kind of terms will work for them and work for you.
Love it. And so, granted, you didn't go the route of educating people. You just got in front of people that already understood the concept. But for those that are listening that may not be as familiar, why would someone consider seller financing? What's the benefit to the seller?
Yeah, there's a lot of different reasons, and you really don't know what the seller's position what their position is until you ask. And different sellers need different things. A lot of times, most of the properties that I've bought with seller financing are men and women in their 60s and 70s that have owned the asset for a while. It's usually free and clear, but not always. And there's ways to structure it if it's not. And they're really, really good people. They've typically self-managed the property, and a lot of times they're just burnt out. They don't want to deal with tenants. They don't want to deal with turnover. They don't want to deal with repair. Really great people. And a lot of times they also have another business they're running or another job that they have. And so they don't really have the time to fully put into this property. And honestly, they've done it for so long. They're just tired investors. And so a lot of times these properties, and what I look for is poorly managed, under rented, and deferred maintenance. And so because of this, a lot of times these homes fit that criteria. And so you're essentially solving a problem for them. If it's an under-rented property that's poorly managed and has some deferred maintenance, you can go and offer them a monthly payment that they're happy with. And you just took away all the headache of owning the property, but they get to be the bank. They get to earn interest and they get that monthly payment for however long that you and they agree on. One of the other big advantages is a lot of these folks, they don't want a huge lump sum because they're going to have to pay that capital gain right up front. Now they're still going to have to pay it over time. But the reason they don't want that lump sum, if you get a lump sum of cash, and it's a problem, it's not a bad problem. I mean, no one's complaining too much about a big lump sum of cash, but they're going to have to pay a huge capital gain on that. Plus, they're going to have to figure out where to put that money. If they want to return on it, they start spending that money, it disappears. A lot of times they don't trust the stock market because they just spent most of their lifetime building up this wealth. They don't want to go put that lump sum in a stock market, and it could be worth half, and they don't want to actively be investing in real estate and looking for deals because they're busy and they've already done that. So it creates this really, really nice scenario for them.
Love that. Yeah. And thank you for breaking that down, why someone would want to consider it. I was going to ask you about the tax situation. And so it really just sort of chunks away they could take that money and 1031 into another passive type investment, but they're now investing in something new. They have to go through that entire process of identifying the 1031 replacement property. And that can be a little stressful, especially if they're older and they already own this property, or they can keep their equity tied up in a property that they're already familiar with.
Exactly.
But they get to offload all the headache and all the pain involved in managing this property, and they still get the cash flow that they may want and probably in some cases still need it.
Yeah, absolutely. I mean, it ends up being almost like a retirement or an annuity for them. And you never know. Like I've had couples that are older who've carried for 30 years, a fully amortized 30-year note. And it just goes back to asking them what they need, because all sellers, all people need something different depending on where they are in life. And so this one couple, the reason they carried for 30 years, and it surprised me originally, is because they want a monthly payment for the rest of their life. But they also want, and they're older, if they are to pass away, they want their adult children to continue to have that payment without having to deal with any of the real estate stuff, because their adult children had never been involved with the real estate. And so you just never know. I mean, sometimes sellers will carry for a short term, but a lot of times I have found that they're willing to carry for a lot longer than you would think. And it's just asking the right questions.
And let me ask you, I'm just curious myself, in the event that one of these older sellers pass and they have a long-term note with you, how does that process work as it goes and passes on to the heirs?
Yeah, it depends how it's structured. So I've had cases where it's actually written into the note, and in other cases, they actually hold the lien in like in a trust, like in a living trust that would then go to the family. So a lot of it's more how they have set that up.
Gotcha.
Sellers have set that up.
And then as far as like ownership of the property, you're basically taking ownership of this property.
Yep. You take title just like you would if you go and get bank financing.
Okay, great. And they just carry a note, and they become the bank.
So instead of it saying, Wells Fargo that you owe for 30 years, it might say, Bob and Jan, you make your payments to them.
Yeah, that's great. And just to put this in context, this isn't something that you've done, 5 times. How many seller financing transactions have you done since you started this process?
I'd say 25 or so, 25 plus. Yeah.
Yeah. And have you bought any property? Well, you did buy the 2 that were no money down, but they weren't seller financing. Have you bought other property that isn't seller financing, or is this pretty much exclusively what you've done?
Yeah, so I do almost no traditional financing except for, and I don't know if you could call those first couple of properties traditional because
yeah,
they're in the subprime. It's almost, so I didn't use any kind of hard money, private money, anything like that for a good decade. And so all my properties were purchased with seller financing up until a certain point. And almost all of those, not all, but almost all of those were no money down or very little down. And then there were times that I would actually walk away with cash. And so I would structure a no money down deal, and then I would close on the property and I'd get deposits and prorated rents. And I would strategically close the first week of the month so that I'd get the most rents at closing. So it kind of offset either my closing costs or if I had a down payment. So if you structure a no money down deal and then you're collecting, especially on a multifamily property, you're collecting rents and deposits and last month's rent at closing, it can be a significant amount of money. So they were oftentimes actually walked away from the closing table with cash in my pocket. Now, if I am bringing money to the table, I still try to strategically close that first week of the month just to offset my costs as much as possible.
Yeah. And so on these deals, the 2025 roughly, were they single family, multifamily, a mix?
It's a complete mix. So single family, small multifamily, more recently a mobile home park.
Cool. And I want to dive into that. But before we do dive into the mobile home park, talk to us a little bit about this concept of, time freedom. You're passionate about this. I want just tell us your thoughts.
Yeah, very passionate about the concept and the idea around time freedom. And it really came to be because I just felt like it was a conversation that people weren't having. And so you would hear people talk a lot about financial freedom. And I got into a lot of conversations with people about financial freedom. And I talked a lot about that with people. It's like, I want to be financially free. I'm going to do that through real estate. And so early on, as I was investing, it was really my mindset was around, all right, making money, building wealth and making money. And then it really came, it kind of grew more into, well, why do I want to be wealthy? Why do I want that for myself? And as I had conversations with other people, why do other people want it? And it was never about the money. Every conversation I got into with someone, both with how I felt and with what other people felt, it was what they could do with that financial freedom. And it always came back to, they wanted time. They wanted time with their family. They wanted time with their friends. They wanted to be able to work out in the middle of the day. They wanted to be able to volunteer or contribute to the community in some way. And it was really more about what they could do with the time that financial freedom gave them. And I realized rarely was anyone ever talking about how they're building something or have built something around the idea of time freedom. And so at some point there was a shift of, where is my time going? Am I building something that's going to add value and give me more time, or is it going to actually take my time away? And I've watched a lot of people build some amazing things financially, but they haven't given themselves any of that time that they originally built that for. And so I think it's important to ask that question as you're building something. Is this actually giving me more time? Is this giving me what I actually wanted from this thing, this business that I'm building?
Yeah, I love the concept. And maybe if you can, obviously you reached financial independence early on.
Yes.
In your career. And so then I think that's the reason a lot of people and a lot of our listeners are probably still chasing that financial independence. But can you give us some practical examples of how that mindset shift, some things that you've done on a practical day-to-day basis in your business that's helped you to achieve that time freedom, not only just financial freedom?
Yeah. So going back a little further, I would say originally it wasn't like that. It was, I kind of took this on with this obsessiveness. I was spending, all day, it's what I thought about. And it's, my wife and I would go on dates, and by the end of it, she was just tired of hearing me talking about, how I'm going to build this thing. And so I realized, yes, some of that obsessiveness of like, hey, I'm going to make this happen. That's important, right? I mean, that's definitely important, but it was very unbalanced. And I realized that that's where my only focus was, but that's really not what was important. That wasn't everything that was important in my life. I like building wealth. I really enjoy real estate, but there's all these other aspects of my life, like my health and my family, that are also really important to me. And so early on, it was, I thought, I had to just work more and work harder and every day and all night and whatnot. And so when I had that realization of, no, it's the time that I want, I started just making decisions around that. And so I would say the first, and it wasn't about even just little decisions. It was more, I wanted to make big decisions that would affect and kind of have that impact of my time, not impacting my time going forward. And so the biggest one was I managed my own properties for the first several years. And at 17 units, it's 10 o'clock at night. I have a young child at home, and I'm in a tenant's house trying to fix a toilet, and I had to call a plumber anyway. And so it took my time, it took my money, and I thought, all right, I am going to turn things over to property management. And so as soon as I turned things over to property management, it freed up a lot of time. Now it cost me a little bit, but I always factor that into the deal. And the other big part of that decision was, do I want to open up my own property management company? Because that is a lot of times the natural path for an investor. They get enough properties and they think I'll hire or I'll start a property management company. And I had tossed that idea around, and then it was that conscious decision of, well, do I want employees? Do I want to create a job for myself? Even if it's a small company, do I want to deal with employees? Do I want to deal with, I'll still be dealing with tenants. I'll still be dealing with all these things. And I realized I didn't want to create a job for myself. And so I chose not to start a property management company, and I turned everything over to third property management. So I'd say that was the first big decision.
Yeah, that's great. That's a great practical example of how your thought process, this concept of time freedom, impacted your business, and you made an active decision about how you structure your business to focus on the time freedom aspect. Anything else that you'd like to mention about this concept?
Yeah, I think another thing I realized too, just that my best use of time a lot of times was just thinking and looking at the big picture stuff. So I would say, 10, 12 years ago, I would think taking a walk I'd probably think that, oh, it's a waste of time. I'm not being productive. But being busy and being productive are very, very different things. And I used to think, oh, if I'm not doing something, I'm not productive. But my best ideas would be out on a walk or I'm in a shower. And it was when I wasn't actively doing something and just thinking. And so I realized I actually want that time. I need that time so I can look at big picture stuff. And if I'm in it, if I'm hands on, then I'm not looking at the big picture stuff. It's really easy to get just bogged down with all the little things and get away from the big picture stuff. And so that was a really important part of it too. Just time to actually think.
That's great. I think a lot of us in this business fall into that trap
Sure.
where we get this feeling of we're not being productive if we're not doing tasks. And so taking that time out to think, I love that. All right, cool. Well, let's segue a little bit into this 30 unit mobile home park that have you closed on it?
Yes. So
Okay.
I purchased 2 mobile home parks in 2019 and working on another one. Actually made an offer on another one today.
Okay. Well, let's talk about the 30 unit mobile home park and talk to us about the thought process you went through to start to consider mobile home parks. Obviously, you've been in small single family or small multifamily for the most part, and now you're making a transition into mobile home parks. Talk to us about that.
Yeah. So as I had mentioned earlier, I was really looking for properties that were poorly managed, under rented, and had deferred maintenance. And I was wanting to move into multifamily, and I had moved into multifamily, smaller and medium sized multifamily. And the cap rates of the multifamily, as I wanted to scale, were just getting just condensed down, where I was seeing negative returns, and there wasn't a big value add component. And I wanted a property to cash flow from the beginning, and I needed some level of value add, whether it was increased rents or somewhere that I could add value to the property. And so I was getting a lot of brokers and agents sending me, these low cap, oh, this is a great deal. And I dig into it for about 2 seconds, and I'm like, this isn't a good deal. And so I found that mobile home parks really just fit that model of poorly managed, under rented, and deferred maintenance. There were a lot of parks that fit that criteria, and it just made kind of a natural sense to scale. I know a lot of people will transition into, okay, it's low caps, I'm going to now go syndicate deals. And that's fine if that's how they want to grow and scale their business. And that was a consideration. Do I want to raise capital and syndicate? And it goes back to the time thing of, I don't want to create a job for myself. So I've chosen not to syndicate. I've partnered on a couple properties, but I felt, going back to the mobile home parks, I felt like there was an opportunity to add value. And, with the most recent park that I purchased, I used seller financing to purchase the park. And even though there is financing available for mobile home parks now, there used to not always be. And so a lot of the park owners already understand and are comfortable with seller financing. In a lot of cases, they actually bought the properties using seller financing. Even some of the small multifamily properties that I bought, back 10 years ago, those sellers were also comfortable with seller financing because they had purchased that way. And so it was just an opportunity. It fit my criteria. I felt like there were sellers that I could have the seller financing conversation with, and that it just fit.
Love it. So let's talk about the most recent acquisition then. How did you find the deal?
Yeah. So roughly 10 years ago, I reached out to a developer in town. He was building these beautiful buildings on campus, and they were just going up all over the place. And they were kind of the first real big new buildings in town. And I thought, who is this person? Like, who are they? What are they doing? How, and I had heard that it was this local guy. And so I reached out just because I simply admired his work. I thought, he's building these amazing buildings. I want to know his story. And so I reached out almost a decade ago, and we had just stayed in contact for all these years. It was, I cannot stress the importance of building genuine relationships. I mean, I truly, the best deals I've done have come out of just genuine relationships. And so, like I said, that was almost a decade ago. We had stayed in contact. We had talked, probably less than once a year. And, we'd meet up on occasion and talk about different properties and stuff, but I wasn't trying to buy anything from him. I wasn't trying to sell him anything. And years later, he messaged me and said, "Hey, I have a friend of mine selling a single family home in the town over. Are you interested?" And I said, "No, I'm looking at value add multifamily and more specifically mobile home parks." And he said, "Hey, I have a mobile home park. That's not my focus. I would sell you one of my parks." And I said, "All right, that sounds great. Would you seller finance it?" And he seller financed it with great terms. And, one of the reasons for that is his focus is on these, A-class buildings. I mean, he's building some riverfront stuff and, beautiful retirement homes and just on a large scale. So his time and energy, even though he is a sophisticated investor, his time and energy does not want to be in the mobile home park space. So it created that scenario of, hey, it's great for him to get it off his books, and it's a great scenario for me. So they were very favorable terms. And it just goes back to how important those relationships are. I had no idea 10 years ago when I reached out to him that he was going to sell me a mobile home park. And when I build relationships today, I have no idea and I have no expectation of where it's going to go. It's a genuine interest in other people.
Yeah. And I've noticed that about you for sure. So talk to us. You mentioned that the terms were favorable. Talk to us about how you structured the deal.
Yeah, it was roughly 2% down, and it was about 194% cash on cash return.
And do you mind sharing, just to give us an idea of what's a purchase price on this?
Yeah, on this I paid $720. It was 30 units. It's actually 30. It's about to be 37 units. We were able to create some other space there, and part of that is just having great property management. And so it's 37 units. The value add. So the reason it was a low money down deal is sellers want different things. He didn't need a large amount of money down. That wasn't what he wanted. He wanted just to not have to deal with the park, and he wanted that monthly payment every month. And so a down payment, he wanted a little bit because to secure the property and show that I'm serious, but that was not a big need of his. And it's just finding out what's important to the seller. I wanted to hold on to a lot more of the capital so I could put back into the park and improve the park. And he understood that.
And was there any specific commitment in the terms as far as what kind of money or you would invest back into the park at all, or was he just comfortable with whatever strategy and business plan you wanted to implement?
He was comfortable with what I had done. I mean, he knew my track record. He knows that I'd been purchasing properties, and so it wasn't just out of the blue. Had no idea who I was. It's we'd talked throughout the years.
Going back to the importance of that relationship again.
Absolutely. I mean, I think with the seller that doesn't know you, and you can definitely build that rapport and relationship, but I find a lot of times the seller, if they don't know who you are, they're going to want more money down because if they don't know you, it's going to be a little more risky in their eyes. One thing that I have done is I've had previous sellers actually write letters of recommendation, sellers that have carried financing for me. And I don't usually just give those as I write an offer. But if I have a seller who's interested in seller financing, maybe they come back with a large down payment because they don't know who I am. And I want to say, hey, look, this isn't the first time I've done this. I've done this many times, and the sellers are happy with, the terms and the outcome. I'm able to provide, several years worth of sellers and say, hey, look, they're happy with this. I've never missed a payment, and everything's been really smooth.
Yeah, that's a great little tip there. That's great. Okay, so you touched on this briefly, adding 7 lots, but what was the business plan going into this? What was your game plan?
Yeah, so the rents were below market. They hadn't been increased in several years. The utilities weren't being billed back, so there was some value there. Long term, I'll eventually sell some of the homes back to the tenants. So I had purchased the park a few months before, and it was kind of a similar scenario where rents hadn't been increased, utilities weren't being billed back, and then the majority of the maintenance and repair were on the park-owned homes. This other park that we're talking about, the most recent one, the park-owned units were actually pretty well maintained. So it was less of the maintenance side. And then there were just some pads that weren't being utilized. I mean, there was a couple of years worth of leaves that were just covering like 3 of the pads. And so just, getting those leaves removed and getting the pads cleared off, all of a sudden, hey, there's three lots. And the another thing, the way it was managed, the woman that had previously managed it, she lived almost 2 hours away. and managing another park. And so even though there was a lot of good things that she did, she just couldn't give it the attention that it really needed. And so my property management is able to aggressively advertise, and they're excited and energetic and really trying to fill up all those pads.
No, that's great. And what's the current status of it today?
Yeah, so several of the vacant pads have been filled. We're doing some stuff with getting some signage up, and there are some actual stick built structures on the property. So about 8 of the units are stick built, and so just cleaning those up with some fresh paint. Like I said, getting the leaves out of there, and opening up the pads. I mean, a lot of these pads have been sitting vacant for years, and so just getting those ones filled is the top priority. Getting those cleaned up and filled.
No, that's great. Cool. Well, thanks for going into that with us a little bit. I know that the focus of our podcast is for the most part on multifamily.
Sure.
But I think it's important for us to understand a little bit more about different asset classes and different asset types, because as the market shifts, there may be some opportunities that present themselves. People may be looking to diversify a little bit, and so I appreciate you going into that.
Yeah.
Well, Gabriel, man, I've been impressed with the business that you have and how you show up to the world. I feel like you're, again, I mentioned this at the beginning that we don't know each other personally, but I feel like I know you just because you're just a genuine guy, and you're constantly just trying to add value to other people and share your insight and your experience and your journey. So I appreciate you doing that. We got to start winding down a little bit here. I've got 3 final questions for you that I want to ask. You ready?
All right, sure.
All right. What's the biggest mistake you've made on your real estate investing journey so far?
The biggest mistake, there's not a single property that I've purchased that I regret purchasing. I think the biggest thing early on is just really understand. If I would have understood how valuable relationships were early on, I think I would spend more time. I mean, and I did a decent amount of time, meeting people and building that. But I think that's the biggest thing. Just, you can't underestimate how important relationships are.
Yeah, love it. And what's
I don't think that really answered your question. But
no, that's great. I love it. What's the biggest win that you've had on your apartment investing journey so far?
Wow, the biggest win. I think I consider every single purchase a win. I wouldn't buy it if it wasn't. Is there
one in particular that stands out to you?
All right, I bought the single family home. It was all boarded up. This was maybe a year and a half ago. It was all boarded up. It was an area of town that I liked, and we live in an area where the median home price is mid to high 300s, and the seller wouldn't let me in the house, and he said, "Nope, I think it's a tear down. I'm not going to let you in the house, but I will sell it to you if you give me an offer." So I said, "Well, if I can't see in the house, I'll give you $30,000 cash." And I bought that home for $30,000 cash. I peeled back the boarded up windows and doors. It actually had brand new windows.
Oh,
it was
wow.
a cosmetic fixer. It was just a dated house. It smelled because it had been closed up, and there was some old tenant stuff left behind. I put about $20,000 into the house. So I was into this thing, $50,000, and I did a cash out refi. It appraised out for $240,000.
Yeah,
so,
that's a win.
Just because somebody else tells you that something's a tear down, or just because someone tells you that something's a certain way, does not mean that's accurate. You gotta do your own math and trust your own instinct.
I love it. Okay, final question for you. What's the best advice that you have for someone who's just starting their real estate investing journey?
Yeah, I would say if you want it bad enough, you gotta go for it. If you want it bad enough, you will find a way. It's easy to make excuses. It's easy to find all these reasons not to start and not to buy a deal. There isn't going to be a perfect deal. And so I think starting is more important than finding that perfect deal. Like, if you want it bad enough, you will find a way to make it happen.
Great. Love it. Great advice. All right, Gabriel. Well, what's the best way for people to get in touch with you, learn more about what you got going on, and connect?
Yeah, Instagram, I'm most active. Gabriel R. Hamel, or if you just search Gabriel Hamel, you'll find me. You can find me on Facebook too, and I have a website at hamelinvestments.com.
Love it. And yeah, if you haven't checked out Gabriel's Instagram page, he's got a killer page, provides a ton of value, and you get to see his face on almost every other post.
Every other post.
That's
my
right.
face and then a
I love
quote
it.
and then a face and then a quote.
It's killer. Yeah, you do a great job. You really
I
do.
appreciate
So,
it.
all right, Gabriel. Well, hey, I appreciate you coming on. I appreciate you talking about your journey and your expertise in this seller financing space, and really not letting the challenges of the market at that time deter you from where you wanted to go to reach this financial independence, and then also the mindset shift that you've had to really start to focus on your time freedom and making adjustments in your business to achieve that in your life as well. You're an inspiration, and you're an all-around good dude. And so I appreciate you taking the time to come on.
Yeah, I appreciate you. Thank you for the kind words, and thanks for having me on. And I hope we've been able to add some value to your listeners.
Absolutely. Okay, we'll talk to you soon. Thanks, Gabriel.
All right, appreciate it.
Bye-bye.